Welcome back, everybody. It's time to look for new positions and track some more transactions, so let's get right to it. Here we are logged in Thinkorswim's paper trading account, and we are reviewing the transactions that we placed last Sunday on the stock ticker BITO, the Bitcoin ETF. If we expand this, we can see we now own 1,000 shares. I believe the cash secured put order that we placed was expired in the money, so it was filled. So you can see we're so 1,000 shares, and it's currently trading at 19.80, and our overall price looks like it's 27. We'll confirm that on the website. And one thing I want to do is come over to the account statement so we can see here's those two transactions that took place last week. And one thing I want to make note of that I thought was interesting is I had originally placed the call order for 3 cents a share, and when it filled, we did get to 3 cents a share, so we got $27 total because we had 9 contracts. But more interestingly is the cash secured put that we placed for $20 or 20 at the strike 20 for 39 cents a share. We actually ended up getting $3.75. So basically, instead of $39 we got for selling that, we instead got $375. So clearly, over the weekend there was some mix up. This happens quite often where the current pricing on the options are one thing at close of the market on Friday, but when they open again on Monday, they drastically are different, or they can be. And this is one of those instances where it was drastically different. Obviously, that's a welcome difference, so that's pretty cool. I honestly think it had priced in. No, it wouldn't have been priced in. I thought maybe the dividend was priced in, but it's not, because the dividend the ex-div date was August 1st for this, so you would have had to own it as of that date in order to get the dividend. So that wasn't part of it. So who knows why it was? It's just a welcome thing, so that's pretty cool. Anyway, we need to go over to the website right now and track these transactions, so let's do that right now. All right, here we are logged into the website, myatmm.com. We're sitting on the dashboard. We need to go over to the cost basis screen, make sure BITO is selected. It's the only one we have, so that's already selected for us. And we need to get the Thinkorswim transactions up on the screen so we can easily add them into the website. So let's do that. There we go. One thing I want to do just to clean this up a little bit is move this over so we can see it fully. There we go. All right. So what we need to do is first enter this first transaction to catalog or record the cash secured put. And actually, we have 2 new positions, so let's go ahead and just put those both in the draft mode. Transaction date for these is August 5th. So we will enter that right here, August 5th. Both of them are sell to opens. One is a call, one is a put. The calls, we sold 9 contracts, and we sold 1 cash secured put. Both expirations were August 9th, this past Friday. The strike price for the calls was 25, and we got 3 cents a share for those. And the strike price for the cash secured put was 20, and we got $3.75 for that one. All right, so we're going to click save on the call, and that's going to move it from the draft positions into this call group. And when we save the put, it's going to move it into puts group, so we'll see that happen. So click save there, moves into the calls. Click save there, moves it into puts. We can go ahead and click on those to expand them so we can see them. It also added them to the proposed records to add below, which means basically to add to the permanent transaction history. So here's the one for the call, $27 right here. The commissions and fees is $5.85. That matches good. The fees were 6 cents, not 9 cents, so we can decrement that. Click the helper icon. It moves it down here to pre-calculate. It basically takes the credit minus the commissions and fees and gives you that calculation for you. Click save. There, that one's retained. Now we got to do it for the cash secured put. And the cash secured put, 65 cents, and the fees were 2 cents. 375 minus those will be the 374.33. Click save, and now that one's retained to the permanent transaction history as well. So want to just look at the overalls, and actually these both expired, and actually I need to do that too, the assignment right here. So the cash secured put expired in the money, so it expired this past Friday. Strike was 20. You can see it closed just below 20 at 19.80, so that would in fact get it assigned to us. We get click on assign. The assignment date, August 10th, we'll put there. The assignment type is stock. One contract, so 100 shares. The assignment price is $20 strike. Click submit. And that added another record into the stocks right here. We can go ahead and close this one. The call expired worthless, so we can get rid of that one. Collapse these two. If we expand the stocks, you can see we have purchased this stock 10 different times through cash secured put assignments. As you can see, we've gone and bought it. We've purchased it for less each time, which has been dollar cost averaging the entire time. One thing I want to note on this stock that I sadly can't demonstrate accurately in the paper trading account is dividends are not paid out or even represented in the paper trading account. And this particular stock pays quite a bit for their dividends. So overall, we have 1,000 shares here. We actually owned 900 as of August 1st, so that would have qualified us for 900 shares at the dividend rate. I'm going to go to the site and show you what the dividend paid out. But so the total cost for us is 25 grand. The total value of the stock right now is 19,800. Gives us a overall unrealized loss of $5,200. The entire time we've been doing this, we've collected $2,844 in premium. So our cost basis with premium is setting at $22.16. The last price is $19.80. So right now, I'm gonna go over and show you what the dividend actually paid out. I think it was like $1.45 a share, but let's go confirm that real quick. All right, so to do that, let me get rid of the Thinkorswim transactions. Do that first. We're gonna open a new tab. We're gonna go to Yahoo Finance. Click there. We're going to type in BITO because that's the stock ticker we're interested in. Go to historical data. And right here, we'll do dividends only. So as you can see, August 1st, 2024, it paid out $1.45 per share dividend. All right, so what would that have been? Let's open up a calculator here. So we own 900 shares times $1.45. So it would have paid us $1,305. I own this stock ticker in my personal account. I don't own 900 shares, but I do own, I think, 400 or 500. So I did get like close to $600 dividend payment this month, and they pay this monthly. As you can see, last month is $1.50. The month before that is $1.77, $1.68. It hasn't always been this high, but it's this high currently. And had we gotten paid that in this paper trading account, we would have had collected significantly more than the $28.44. That's basically where I'm going with this. So we would have collected, what did I say? That was $1,305 more. So this plus the $28.44. So we would have collected $41.49. Had we been collecting dividends the entire time, this would be significantly more, and we'd probably be at break even at this point. So in any case, like I said, it's not represented in the paper trading account, so we can't do that. Anyway, what we need to do right now is go over to Thinkorswim and look for some new transactions, new orders to place for the covered calls for the 1,000 shares we own, and to place another cash secured put. So let's go do that right now. All right, here we are back on Thinkorswim. Let's get the cost basis up on the screen. There we go. And we want to go over to the Analyze tab. We want to look for BITO. And let's go ahead and pull this back over so we can get the chart back in front of us. So it's setting on BITO. And so we're looking at the past 3 months. Let's go down to the last month. And as you can see, it's like kind of all over the place. And it looks like we're kind of in an uptrend right now. So it looks like it'll continue going up. That's important because if we want to like sell a covered call for less than what our cost basis is setting at, we would probably not want it to be in an uptrend like this because chances of it meeting it are higher, and we don't want to get called out for less than our cost basis because then we'll like lose some of the premium we've collected, and we don't want to do that. So our current cost basis is $25. Now that's interesting, isn't it? The website says cost basis is 25, and over here in activity and positions it says it's 27. And I'm thinking what it's not accounting for is maybe some of the premium we collected in a different transaction, or the dividends possibly. Not sure. Anyways, that's one of the reasons why you should use the web application instead, because it accounts for everything, even stuff that the Thinkorswim's not seeing possibly. All right, because Thinkorswim can only monitor what you've actually done within it. All right, so our current cost basis is setting at 25. The cost basis with premium is 22.16. So I mean, theoretically, we could sell calls at 22.16, or actually it'd be 22.50, and we would break even if it got called out of that. Let's look for the 25s first, and you could either just do this. See, even showing 14 doesn't show everything, so you'd have to show all of them to get to the 25s. But something else you can do that sometimes looks better because you can see more of the weeks on the screen is something I like to do. So it's setting at 25, so we'll do 25 minimum, 25 maximum, so that will show us just the 25 strikes for the next upcoming weeks. So right here looks like we can do 25 for a penny for next week. We can do 4 cents out 2 weeks, 8 cents out 3 weeks, and then it becomes a mystery because it doesn't have anything defined yet. Trying to wonder here. I'm going to look at the cash secured put side first. So let's reset that. So we can get 50 cents here and 59 cents to go out 2 weeks on the cash secured put. So not much benefit of going out the next week. Something else that I like to look at is over on the web application, it's showing the weekly average trading range, which is $1.14 for this ticker. So right now, 1980, $1 more would be, I don't know. Let's look at the deltas instead. So let's do kind of a trading range here. Strike price. Remember, I was targeting 25, but I'm considering trying to sell a call for less than that, so we can see if we can collect a little bit more premium. So let's go down to $20. That's too low. So 1980 was the last trading price. We'll go. The average trading range is $1.14. So let's go. We'll just do 21 to 25, so we can see what the premiums are for this range. So there we go. See, selling a covered call in 5 days is 21 cents a share. But that's only right here. So do we think it would go up that high in 5 days? Well, if it follows the current trajectory, it absolutely will. I mean, if it increases as much as it increased the past 5 days, it'll definitely hit that. You know, will it? Who knows? I mean, it's all speculation. Will it hit 22? That's a bit of a further, you know, I'm just looking at the premiums. 22 would give us 8 cents for that. 23 would give us, actually we can't see what 23 is. Why can't we see what 23 is? Oh, it's because I'm only showing those. Let me do that, sorry. Alright, so 23, 4 cents, 24, a penny. There's a penny. I don't know. Almost like being safe. Generally, you don't want to do this unless if you're going to look at the stock every single day. If you're looking at the stock price, the price movement every single day, then it's a lot safer to sell up here, because if it does approach your number and goes even maybe a little bit past it, you can always buy it back. It'll cost you a little bit more than when you sold it, but at least you won't have to get assigned the call. So we're going to stay safe for this demo purpose. I am going to go back to the 25s, because this guarantees we will definitely not lose money, at least through assignments we won't. And I am going to go ahead and go out 2 weeks, because if you can only get a penny this week, but I can get 4 times that by going out another week at a safe price, we're going to do that. So I'm going to go there, and we have 1,000 shares, so that's 10 contracts. And we should be able to get 4 cents because the distance is, the mark is 4.5 cents, and that's the difference between the bid and the ask, 4 and 5 cents. So we're going to continue to go for 4 cents. We're going to right click, confirm, and send. We should get about $33 for that. We'll send that off, so that order is queued, and now we need to look for the cash secured put. So let's go ahead and reset that filter, go back to 4 strikes, and we already said that we can get 51 cents, it looks like, for the 1950 cash secured put, and you can only get a little bit more for the next week out, so that's not worth it. So we'll continue to do the 1 week, even though the covered call is placed at 2 weeks out. So we'll just go ahead and place that one. The mark is 51, so we'll bump that up to 51. And then we'll only do 1 contract of that. It's the strike of 1950. We'll right click, confirm, and send. So we should get about $50 for that, and click send. So there, now those 2 orders are queued, and we will wait and see what happens next week. Something else that I wanted to do that I had forgotten to do last week is check the overall account value. And actually what you can do is come over to the monitor tab, the account statement, also look right here. So let me go ahead and collapse this. So it's 76,870. We need to go ahead and let me get this off the screen. So 76,870. Bring the web application back over here, go back to the dashboard. So, oh, you know what I forgot to do? I forgot to enter the transaction for the assignment. So let's come back over here, and we had this down here. We didn't record, we assigned it, but we didn't save the transaction. So if you click save here, it'll add that proposed record back down here, and we need to click this helper in this and then save. There, now we've added that. We forgot to do that, or I forgot to do that. All right, so come back to the dashboard. There we go. So the total 76,870.08, 76,870.08. So now they match, they're reconciled. We have the both applications matching. Also want to look at the premiums we've collected so far for August, $395. So it looks like we're averaging around 300-ish every month. We did thousands those first couple months because the premiums were significantly higher back then. Keep in mind, we would have been collecting dividends all this time, but the paper trading doesn't reflect that, so we can't track that information. But anyway, yeah, we'll wait till next week and review what happens for those transaction orders we've placed. I want to thank you for watching. Like and subscribe if you haven't already, and go out today to myatmm.com and get your free account so you can start tracking your own transactions. Thanks, and I'll see you in the next one.